The topic for today is the research methodology that I use to build conviction in a stock. So if I have a couple of stocks that are working, this is how I try to make a more informed and objective decision as to which stocks I may want to sell at 20 and 25% and which stocks I may want to hold for a potential bigger move. Now obviously there's always technical and market factors to consider in making this decision, but as highlighted in the quote above from the successful investor, I found that developing a deeper understanding of the fundamental factors is a critical component in deciding which stocks have the potential to be a market leader. After I started spending a little more time trying to learn the story of a company by exploring the company website, listening to conference calls, or going through investor presentations, I found that it wasn't difficult to find information that sounded good. However, just as Bill O'Neill warns on how to make money in stocks, this information can often be misleading. I knew there was useful information in these sources, but it wasn't always obvious which information was useful. So what I realized is that I needed to conduct my company research similarly to how I analyzed the technical components on a chart or went through the company's key fundamental numbers, objectively. And that's what I'm going to talk to you about today, the objective process I take to researching the fundamental components of a company. Obviously, the more you study a particular company, the better you are going to understand it. But I try to bring some structure to that research by focusing on 5 questions. And even though I may learn about a lot of different things, answering these 5 questions is what is really going to drive my decision as to whether I should try to attempt to hold the stock for a longer move. I actually go so far as to actually document a few sentences answering these 5 questions. And before I get started, I want to be clear. The opinion I form certainly does not trump the price and volume action of a stock. This whole process assumes that the stock is moving up. If the stock starts triggering sell rules, I'm certainly not going to let my opinion about the company keep me from adhering to those rules. The first question I want to answer is, what does the company do to make money? Now this sounds like a pretty easy question to answer, and oftentimes it is, but in some cases it can be a bit more difficult. For example, if you're researching a tech company like Palo Alto or Cavium, and you're not in the IT business, even after clicking around the product section on the company website, it may not always be clear just what type of business this company's in. This is where I find Investors Business Daily or Investors.com to be such a wonderful tool. Simply go to the site and type in the ticker, and you can almost always find an article that elaborates on the company's business. Even if the article is a few years old, it can help you better understand what the company sells and who its customers are. And this baseline understanding is important for later analysis on what is driving the growth in the company. Some of you are probably familiar with the stock HAR, Harman, which serves as a great example of why it can be beneficial to study what the company does. I had always known Harman as a speaker and electronics company, but it was their growth in the automotive industry that really fueled this powerful move the last year. I had originally noticed Harman because of the earnings growth and the new price highs, but I was able to learn a little bit about the automotive segment of their business from this article published in IBD in February of 2012. The next question relates to the industry group of the company. Changes in industry conditions can often be a driver of growth, so I want to study if there are any factors industry-wide that the company might benefit from. We'll go through an example later in the presentation to hopefully further illustrate. IBD, in particular the Industry Snapshot section, is a great source to learn about a company's industry conditions. Investor presentations, often found on the company website, can also be a great source to learn about potential industry tailwinds. After years of struggling, the airlines have been big winners in 2013 and 2014, as one can see by the massive price increases in Southwest Airlines, Spirit Airlines, and Delta Airlines. Thanks to many cost-saving initiatives implemented earlier in the decade and recent mergers in the industry, many of the airlines have been operating much more efficiently than in years past. Now, lower fuel prices are helping to drive higher profit margins for the airlines. After noticing strength in the chart or improvements in some of the company's earnings, potential investors could have learned a little about these industry conditions from a few IBD articles published in December of 2012. Now, I'm not suggesting these articles alone would have driven you to buy these stocks, but they certainly provided some useful information to help build a case to potentially buy. The next 3 questions of the process are really tied to the company's earnings. As many of the listeners know, future earnings growth was the dominant factor in past market winners. So that's what I really want to focus on when I think about the potential of a stock move, future earnings growth. The next 2 questions I want to think through are, what is the catalyst driving earnings growth, and is this earnings growth sustainable? All of the companies whose stocks that I consider buying have shown some level of growth. In most cases, a company has shown evidence of recent earnings growth. At the very least, the company has shown evidence of sales growth with the expectation of earnings growth to occur in the near future. In either case, I want to figure out what is driving that growth. The next part of that equation is the sustainability of that growth. I don't want to hold the stock of a company that is only going to grow for a quarter or two. I want to hold the stock of a company that has the potential to grow over a number of quarters. Additionally, a company may have been putting up exceptional numbers for a year or two and could be running out of steam. That is why I really want to think through what the company is doing going forward to drive future earnings growth. Two great places to learn about a company's earnings potential are the New America and Internet Technology sections of Investors Business Daily. Company investor presentations and earning call transcripts are also valuable resources to learn about the quality of a company's earnings. When analyzing the question, what's driving the earnings growth, realize that really it's just a matter of thinking through the N in CAN SLIM, which I know most of the listeners are familiar with. These are some of the more common growth catalysts. Obviously, a new product or service is often a growth driver, but sometimes it may just be the improvement of an existing product, or in other cases, the company is simply expanding the potential customer base. Regardless, when I'm studying a company, I may read or hear all sorts of things that sound good, but if I cannot identify the growth catalysts, I'm probably not interested in holding the stock. Here are a couple great examples of earnings growth catalysts. Tesla had over 15,000 reservations for its all-electric Model S car at the end of 2012. The company will have increased their car deliveries over 1,000% the last 2 years. Netflix improved their streaming service by adding original content and expanding outside the United States. In doing so, they almost doubled their subscribers since the end of 2012. Gilead Sciences essentially cured Hep C with their new drug and added about $6 billion in sales in the first 2 quarters of 2014. That's over 50% of the company's total 2013 annual revenue. These catalysts drove massive earnings growth for these companies and big stock price increases for investors. In addition to having that new product or service, Tesla, Netflix, and Gilead also had a growth catalyst that addressed a large market. This is one of the things that I really try to pay attention to help identify just how sustainable the earnings are. I want to look at the total addressable market of a company's new product, service, or expansion. If a company that currently brings in $250 million in annual revenue has a new product with a $500 billion total addressable market, that company could see a massive increase in revenue, even if they only capture 5% of that market. Additionally, I want to see that a company's earnings growth is in conjunction with an increase in revenue. If I do not see reoccurring increases in revenue, then I worry that the earnings growth is simply being driven by a one-time event or cost cutting. I'll discuss how cost cutting fits in, but in and of itself, cost cutting is not a sustainable earnings growth driver. I also like to look ahead at future quarter and annual estimates. Although these estimates are not always reliable, I want to see that the analysts expect the company's earnings and sales to grow. Lastly, I like to hear when a company has product backlog. Although sometimes this can be an indication of a capacity issue, oftentimes it is an indication of growing demand for a new product. Here are some clues about Tesla's earnings sustainability from the 2012 Q4 conference call held a few weeks before the stock broke out to all-time new highs. In the call, CEO Elon Musk mentions the company's goal of increasing Model S deliveries to 20,000 in the next year. He mentions the 15,000 reservations they already had going into 2013. He also discussed the company's expansion into Europe and Asia. Again, I'm not suggesting that one goes out and buys a stock because of these comments, but as the stock's technical picture improves, these are great points to consider when analyzing just how sustainable the earnings growth is. The clues are out there for Gilead as well. IBD published a few great articles on Gilead highlighting the potential of the company's then pending approval Hep C drug. The 2011 article notes the effectiveness of the drug, and the May of 2013 article notes the potential market of the drug. Both of these articles were published at a time when Gilead stock was trading well below its current price. So the point I'm trying to make is that the information's out there. It just sometimes takes a little digging to find it.
The last question I try to answer is in regards to profit margins. Just as Bill O'Neill mentions in his books, I look to see that a company's profit margins are near highs and the best in the industry. I also want to look for a company whose margins are expanding, and I try to research the potential of just how further they could expand. Microsoft is a great example of a company that was able to steadily increase its profit margins. Most of you are probably familiar with the massive increases in revenue and earnings that occurred throughout the stock's huge run in the 80s and 90s. But the other thing to take note of is that Microsoft's pre-tax margins expanded significantly from just under 29% in 1994 to close to 38% in 1992. A company that can not only significantly grow its revenue, but also find ways to operate more efficiently, really has the potential to deliver explosive earnings, just as Microsoft did for a number of years.
So when analyzing how well a company is doing with profit margins, I certainly want to know whether margins have accelerated in previous quarters, but I also want to figure out what is driving the margin expansion, and does the company expect the expansion to continue in the future? Listed are some of the common drivers of bigger profit margins. Most companies sell more than one product, and if the company is seeing a larger percentage of their revenue coming from a higher margin product, then the company's overall margins will likely also improve. This is especially powerful if the higher margin product is something new with a large market opportunity. Also, if you find a company with accelerating earnings, this can be an indication that they are ramping up a higher margin business. The other thing I listen for is if management mentions that the company has high operating leverage or fixed cost structure. As revenue increases and exceeds the company's fixed costs, large percentages of that incremental revenue will likely hit the bottom line. If a company is seeing substantial demand for a new product or service, and 50% or more of that revenue is hitting the bottom line, that's a formula for huge earnings growth. Cost cutting, restructuring, or eliminating an unprofitable business can also help a company drive higher profit margins. But again, I want to hear about these in conjunction with some kind of earnings growth driver. Now that we've gone through the 5 questions, we'll go through a current example. Note that this is not a recommendation and that I don't own the stock. Furthermore, this is not meant to be an all-inclusive analysis of the company. The stock that I'm going to discuss is Mattress Firm, ticker MFRM. I think this serves as a great example in that Mattress Firm is a company that essentially just took a working business and expanded it into other areas. This model is very common among the retail sector, and this type of analysis is fitting for most retail companies. Note that Mattress Firm has posted some great fundamentals in recent quarters, and the stock recently hit an all-time price high the week of November 14, 2014. What does the company do? Well, there aren't any surprises about what Mattress Firm does. They operate close to 1,500 firms selling mainly mattresses. In fact, 90% of their sales are derived from their mattress sales. I note that they sell Tempur-Pedic, ticker TPX, just to highlight that Tempur-Pedic could also be a good company to look at, so as to gain a better understanding of what might be going on with Mattress Firm. Now, as far as the industry, mattress sales have actually been rather depressed since 2006, but Mattress Firm's management sees this as an opportunity. At the 12 June 2014 investor conference, they highlighted that 80% of mattress sales are replacements, and that 65% of those replacements are over 8 years old. So if everyone was buying mattresses going into 2005 and 2006, then we're now in that 8-year replacement window, which could be good for the industry. In that same presentation, management discussed the correlation between mattress sales and housing prices. One could assume that in a depressed economy, consumers are less likely to spend money on a new mattress. But when consumers are feeling good about their overall wealth, maybe due to higher home prices or presumably higher stock prices, they're more likely to spend money on a mattress replacement. This is a graph of the average home price according to Zillow.com. Note that Zillow estimates home prices to improve going into 2015. Perhaps this will help drive higher mattress sales. Another thing to look at industry-wise are Mattress Firm's competitors. Select Comfort Corporation is also in the mattress business and has shown recent earnings and sales growth. It may be worth looking into what their management says regarding potential industry tailwinds. I also want to point out that Select Comfort did post higher pre-tax margins than Mattress Firm last year, according to IBD Stock Checkup. Now, as far as earnings, well, a quick glance at IBD Stock Checkup will show the last quarter Mattress Firm posted a 42% increase in quarterly earnings and a 36% increase in revenue. What's driving this growth? Well, largely through acquisition, the company has more than doubled their store count in the last 3 years. Additionally, over 90% of their stores hold the number 1 market share in their respective area. Now, is this growth sustainable? Well, per the June of 2014 investor conference, Mattress Firm management expects to continue expanding through 2018 and beyond, planning to operate an additional 645 stores by 2018. Another important factor to consider when analyzing the sustainability of Mattress Firm's earnings are same-store sales. It's one thing if the company is expanding the store count, but if existing stores aren't doing very well, then I wouldn't expect the growth to last long. These are the same-store sales the last 4 quarters for Mattress Firm, which I found from the respective earnings call transcripts. You can see that the same-store sales have been growing, and actually the 2-quarter averages have been accelerating. As far as profit margins, well, Mattress Firm's current margins are not quite at the 2011 high, but they did improve significantly last quarter. Furthermore, management highlighted in the first quarter of 2014 earnings call that margins are expected to expand as recent acquisitions are better incorporated into the business. These new acquired companies drug down margins some, and it is taking a little bit of time to fully integrate these new stores into Mattress Firm's operating model. Additionally, Mattress Firm's margins were hit some in the first quarter of 2014 as the company used summer sales to clear out old inventory. The second quarter margins recovered as the newer luxury brands gained momentum. The big question, of course, will these margins expand further? Well, according to the June 2014 investors presentation, management expects that margins will increase to over 13% by 2018. So we answered our 5 questions. Now what? Well, we weigh the answers against the answers of the other stocks in our portfolio. We consider market conditions and the technical action of the stock. Think through the earnings potential and price targets and formulate a plan. Some may decide Mattress Firm is worth holding for a longer move. Others may decide that there are better opportunities out there. In either case, doing this type of research will allow you to make a more informed decision. So in closing, I discussed the 5 questions that I use to keep my research focused. Regardless of whether I'm listening to an earnings report, reading a New America article on IBD, or going through press releases on the company website, I'm always trying to think through these 5 questions. I'm certainly not suggesting that these are the only things to consider, but these 5 questions are where I'm going to place my initial research focus. Ideally, I'm going to try to do this research before buying a stock, but at the very least, I want to ensure I've done my homework before going into an earnings report, before getting to that 20 to 25% mark. I also want to ensure that I revisit these questions and update my research for as long as I hold the stock. This concludes my presentation. I hope you found this information informative. Thank you for listening, and if you have any questions for Heather or I, please feel free to contact us through the Tacoma IBD website.